TGIF Warriors, how are you? How you doing, Mike? Bran, Will, welcome to F.A.C.E. Ryan, yes, TFIF. I'm not sure what it means. I could guess. Hugo, how are you? Doing okay? Blake, everyone's ready to go. So let's take a look at what's happening here. I was looking at EG. You guys see it?
Sure can.
I'm trying it down here, Ryan. I know it's a Friday. It had a bad week. It really does need to get back over 84.50, but this high up here is there was sure a lot of mo. And if the dollar's going to continue lower from here, the euro should start holding up better than cable, which I think is happening today, right? So where's your head at, Ryan, going into the weekend? What do you think about that EG shot?
Yeah, it's held again overnight, that 84 level, so you know where you're wrong.
Yeah,
You got a bit of space down to sort of 83.80.
right.
If you're under that, then things are
Yeah,
maybe going a bit wrong. But
yeah. Don't
yeah,
put your stop under. Let's see, what's this low? The low. Here's where most people put their stop. 84.03.5 low.
yeah.
They'll put in an 84.02 stop.
Where's your moving average?
Uh,
89, 90, something like that.
yeah, 90.
Yeah. So I've got a bit of level at 80, 85-ish. So yeah, below 8. If you
That's
wanted a tight one, below 80. And
yeah. It's like where it came out here. So
yeah,
this was the high, and this was the breakout day. So it's kind of like buying a pullback to a breakout, and this, you know, could be achieved again. If this is 4 and we're going down to 96, or like Greg, I think's 94, um, this should lead euro pound. So we're on a Friday, so I believe we had even though the dollar's holding support, that par level's pretty good support. I believe it's a reversal week to the downside. No, not quite. Okay,
not
so
yet.
still high,
They're
still
still
higher.
tight.
It's still higher on, still higher on the week.
Yeah, I mean
Uh,
the good thing with Euro Sterling is if something does happen on the weekend, you probably touch wood, and I don't want to give you the kiss of death. Touch wood, it's not going to move 500 pips on you,
yeah.
so you have plenty of
What's
time to react to it.
yeah. What's really moved in both directions? This has become the wildest market now. Not a good week for gold. It tried to recover, and it's closing near the lower end of the range. You know,
Biggest negative week for a
yeah,
couple of years now, isn't it?
yeah, that's a big range. It's not the first week down, so you actually had a failing rally up here. It's a 2 week reversal because we're closing. Well, it's not closing at 32.40. So
Well, you
that's this
remember,
first 2 week reversal all the way up.
yeah, you remember we were looking at this a couple of weeks ago and how Asia had been buying it in the same sort of time slot for I think something like 9, 10 days on the trot. They were buying it
Yeah,
sort of late April, early May.
yeah.
Well, I just did a count today. In that same time slot, they've sold it the last 7 out of 8 days in
Huh.
Asia.
Okay, so they've been selling.
Yeah, whoever was buying it has been selling it.
Huh. So they're taking off a hedge. I think that people are, if the market's good, not as much need for gold as a hedge. Even though they both have gone up together, I've heard, I think people are looking for it to be like a negative corollary relationship now. When the market's up, gold is down. So
Yeah.
since the market bottom, you look at it, what, a month ago? That's my goal top.
Yeah. But I think anyone who's long below sort of 2,500 isn't worrying about this. Some probably even see it as a bit of a pullback to buy and carry on
Oh
getting
yeah.
long.
Yeah, a lot of people talking this level, initially like the 3,100 level. But I think this is reasonable over the next month or so. It didn't look that way till this week. It was just maybe a hope that I could buy it down here. Now it looks a little bit more likely. So silver, I've had this dot, 30 and a half's a big level for, that's if you believe that this was the beginning of a new wave and this is just correcting. Okay, so 61.8, that's why I have it there. Okay, so Kay's taking the day off, deserves it.
Is he?
Here.
Oh, okay, he must have checked
Another
in
one?
because I check the who's here before I go live.
Yeah, I was
Yeah.
a bit late.
You have a note.
Yeah.
Do you have a note from Mom?
Yeah, somebody in the chat room actually held me up.
Well then that's okay. Then you deserve a medal.
Thank you.
Look at the big move here. At the open, I covered my TLT puts, and not so much about TLT early, but I saw this candle on the 10-year when they tried to rally it and it was starting to put in this reversal. I said, the hell with it. Maybe we are heading back down. It's one of the most difficult charts I can see. There's some people thinking this is a high and we're really going lower. So out of that, um, no war with Iran, so I should probably just get out of WTI, but it really they really didn't take much out of it, and it held this. If it could just close back over 63, it's going to look pretty good. And then I was thinking about this in the S&Ps, and it's already surpassed it. As I had this 59.20 area
Yeah.
as being really big on the way down. That's where I thought the market was starting to break down. It was, this black line here, and now we're above it. But I look at a few of the mags, and for example, impressed with this. Looks like some type of flag. It hasn't even rallied back halfway yet. Apple's still kind of dogging it for you, Blake, and
But, I mean, Trump is taking care of the
Apple.
Apple. Trump is
Yes,
trading very, very actively Apple now.
yeah, he's got some puts on.
Yeah,
And the semis are the strongest group. Here's Nvidia, which I put
they
on before the throw over.
they
So
they, they struck quite big deals in the Middle East. Huh?
uh, President Trump.
No, Nvidia.
Oh, okay. Is that what happened?
Nvidia chips there. I mean, yeah, soon. I mean, the whole desert will be covered in Nvidia and AMD chips.
Okay. Just be aware there are a lot of things out there. Every chart looks like was a rising wedge. Some of them have throwovers that are extreme like this. Some of them not as extreme. So anyway, plus there's a moving average here. Everything. You don't get short this thing until it's back inside
Hmm.
um, the formation, and I think that's about
I
it.
yeah,
What are you thinking? What are you going home with, Kay, over the weekend? You holding
well,
anything?
I'm still a bit short euro sterling. I've I have virtually $0 in position. While my long-term silver is a different story. What I did do, but then it's not cash. I just took a punt that next week at the G7 nothing will be decided for between Japan and the US, and I bought some sterling yen calls. But I'm really traveling extremely light. Oh yeah, I'm still a bit short dollar mix as well, but that is now, yeah, it's doing all right.
Yeah.
But yeah, for the rest, I don't have much, you know.
Yeah.
The book's going home. I think next week that G7, uh, when uh, when the Americans will be back home from the Middle East, I think Besant will be there, and then there may be some more chatter. So it's going to be an interesting week next.
Yeah.
And
They
then
all go
that's
ahead.
why I'm keeping energy in my book, Dale. I mean,
Yeah.
why? I mean, why flip a coin on today's markets when you have a lot happening next weekend?
Yeah, definitely something that you learn with time, that it's okay to do nothing.
Yeah,
A lot of people feel very uncomfortable, like it's natural. I should be doing something, you know.
but
I
when
need a trade.
when that feeling, yeah, when that's
I have to make my quota, all
yes,
that stuff.
I'd encourage people to make a note of all their trades when they have this kind of feeling, and then look at the ratio of winners and losers when you feel like, oh, I have to do something.
Yeah,
I think a lot of people will come to the conclusion that it's nothing better than no better than a 50-50 or even worse.
yeah, yeah. So that's not a good reason to trade, is because you're not trading.
You know,
Uh, Go ahead.
that's such a great conversation to explore someday.
Yeah. Okay.
Really
So
is.
what do you have on what are you having for brunch here in the market, Blake?
I have my son's graduation party coming up this Sunday, and we're
Oh,
probably gonna have about 100 people circling in and out of our or passing through our home on Sunday. So
wow.
I just loaded
Congratulations.
what's that?
Congratulations.
Uh, thanks. Yeah, it's funny. You think that getting your kid out of your house is going to save you money, but now I've got to look forward to next 5 years of paying for college. And we were just looking talking about food. The reason I was talking about food is because you're talking about food. Is that we have like all these like all this food prep that's at our house for the weekend. But it's like, man, we were just paying the school's cafeteria bill for the next year, and I'm like, man, what are these kids gonna eat the next year? It's crazy. Anyway,
Yeah.
you were asking what's on the menu for brunch. I'm gonna say that it's Ryan's options that he's posted in the Euro. Ryan, did you talk about that this morning?
Nope.
Okay, well, this is if you guys want to know, Dale, I'll take it over for
You
here.
got it, buddy.
Yeah, if you want to know why the euro is pegged to this 112 level, Ryan brought this up yesterday. You can see on the options page, the only highlighted number he has there is, and this is on Forex Analytix. Ryan, tell people why it's so important that you comb through this data. You can get options data different places, but you go the extra step and extra mile to pull this data out and extract it for the community that's in Forex Analytix. For what reason and why?
Yeah, well, I mean, firstly, you won't get this info anywhere else as accurate as I get it, because I've seen other sources. Not blowing my own trumpet, I just make sure. I've been doing it for 10 years now, so
Yeah.
I know what to look for. But yeah, the options market is obviously is of big importance to what happens in spot markets, because, like you say, you can get a price glued around a big expiry when it's quiet. But it also just gives you an insight sometimes, which way the option market is leaning. When we got a big move up from 105 in euro dollar, all the options, calls and puts were sort of 108, 109 and down to 102, 103, that sort of area. So when you get a big move out of range, the option market has to play a bit of catch up. or they have to readjust because they were trading between a sort of band, and now they're out that band. So it can cause options players to, as I say, do a bit of catch up, and that can add further to moves. But otherwise, you can use it just to get a little inkling, where the options are stacking up. Are there more bigger calls down below, or are there bigger puts above? Not that I can do the analysis on the call put ratios, but it's a lot of work. But you just get to see, where the option market is, a little bit of a snapshot of what the option market's up to. And as I say, intraday, you just look at if there's any decent size ones, how that might affect the price.
And so you came up with a pretty big number in the euro. And so last night, Steve, who's obviously in the UK, he's one of our newcomers to our room, probably a Flow Show listener, would be my assumption. He was asking about the 112 level. Why is that going to be big, and why is the option market? What's the option market going to do there? And we were like, hey, we get on either side, and this is a conversation. If you go in the general chat room that we're having last night. And again, if you're not in the Forex Analytics community, having these conversations with people and understanding these different topics, we were talking about it last night as far as, where the, I have to go figure out where exactly we were talking about. Anyway, we were talking about the euro is going to be on both sides of the 112 level, and it's probably a fade if you get into the 112.30s or near 112.30. And today we only got to 112.19, but you can see how it's just really a magnet now around the 112 level. When's that option expire, Ryan?
10 a.m. Your time, which is 3 o'clock our time,
Which
UK
is just
time.
yeah, about a couple hours from now.
The real way to look at potentially trading this is to see what the dollar's doing elsewhere. So, for example, let's say the dollar's strengthening and cable's dropping down to 132.50, more. Aussie dollar's dropping, Kiwi dollar's dropping. They're all dropping close to the expiry, but euro dollar isn't, and it's hanging around that 112 area. That's going to potentially tell you that the options are having an effect in that, say, or in the price action. And then there might be a bit of a catch-up trade. So as soon as the expiry is passed and the options guys have done their thing, then perhaps euro dollar joins the rest and starts coming off a bit stronger. So
okay. So if it's diverging away, due to this magnet, then once the options expire, it has
the potential for a trade. Yeah.
Potential.
Wouldn't it have been very useful? And I'm sure you had this knowledge before when we had the big pop in euro earlier in the week, that it was above 112, and because there was so much open interest there, that you could bet that they were going to take it back to that strike. You ever use them for that reason?
That's a good question, Dale.
I did a study some years ago when I was at Forex Live.
Did you publish it somewhere?
Yeah, I did. I'd have to dig it up. Where there was a huge expiry in dollar CAD in the loonie. There was nearly 5 billion rolling off.
Oh my God, that's huge.
But it was 70, 80, 90 pips away from the price. And I thought, well, let's see what happens. Nothing, absolutely nothing happened. Even in a quiet day. The problem is you don't know how that. Take today's option 3.whatever it is 39. You don't know how that's broken down. There could be 100 people trading that. People tend to look at those options and think, oh, it's one big player doing one big 3 billion option. That's not necessarily the case. There could be 100 different trades within that,
right?
And usually are. So you're relying on everybody doing the same thing within that bracket and at the same time. Some may be hedges. Some may be hedges against hedges. Some, you just don't know what the reasons for those options being put on. In the good old days when we used to hear that what the big players were doing, and then you could work that line, Dale. But especially if China was involved in something like a double no touch, you could trade it. But now it's difficult to find that information.
Yeah, like in stock options, people look for sweeps. Okay, and there's different kinds of sweeps, kind that are like, I want them at any price. They're going out in time with a reasonable strike.
Yeah.
Those are the guys you coattail. So can you tell if it's institutional or retail by the transactions to follow where the big flow is going?
You could do if I looked into the transaction data, because you can see all the breakdown. So let's say that 3.29 billion or whatever it is, let's say that all got put in this week. So someone traded
Yeah.
that this week rather than something from 6 months ago. Then you get a bit of idea. Oh, hang on, why someone decided to put on that amount of options, a few days before an expiry. Those sort of things you
Yeah.
can pick up on, and then you say, well, maybe there's one big player having a go. But these options, they could be put on half of it could have been put on a year ago, just because of it was a hedge or something
Yeah.
against whatever. So there is ways of doing it. It's a lot of work, unfortunately.
Yeah.
And there is no way of knowing who did it.
Exactly.
Yeah.
Could be a
Yeah. It's,
corporate,
it's an
could
interesting
be a corporate,
conversation,
could be a hedge fund, could be an asset manager. You don't know.
or it could just be K-Man
Or play. No,
or
I'm not.
K-Man.
I'm not in the list yet.
All right. Well, hey, Dale, you asked like what's on the menu. I'm going to give you guys a little bit of a freebie. If you go into the Forex Analytics trades room, what I just put on is long sterling pound Kiwi at 225.24. The reason why I'm doing that, and this I'm going to give you guys a little bit of a freebie. It's something I did talk about on the week ahead video. Or week ahead video. I'm sorry, the trade-off. I was looking for pound Kiwi to rally into this channel, and as soon as it closed above the 38% retracement, which was yesterday, it's pulled back to the levels that I wanted to get long, and I wrote that actually overnight in Asia last night. I said, hey, it comes back to this 225 level. I want to be on the long side. It's a 38% retracement, but it's already shown its direction. So I'm going to be trading it back to the upside, and it's kind of a hedge against a little bit of risk off. It's not a huge correlation right now, but it is something that, if we see a little pullback in the markets, it's going to only assist the pound Kiwi higher. So you asked what's on the menu this morning for brunch or
Okay,
for
interesting.
breakfast? There we
Yeah,
go.
sounds
Yeah.
good.
Yeah,
Any
some,
pancakes on the side?
no syrup,
All
no
right.
syrup on, no pancakes and syrup and griddles on the side. Nope.
Okay.
No, but hey, I do want to, just have a little bit of a conversation about, this Friday. I mean, because we are wrapping up a week. An interesting headline, came out of last night, and Trump says his team's gonna set tariff rates. Basically, they can't negotiate with. Now, it's funny, they actually said 150 countries now, so instead of 200. So they've gotten that straight. But they're going to be setting tariff rates over the next few weeks for people they can't negotiate with. Basically, they're saying that we can't negotiate with everybody. We're just going to set a rate, which is going to be really interesting in the next couple of weeks. We got to keep our we got to pay a lot of attention to what the Trump administration is going to set for, if it's going to be a 10% blanket rate or what. We don't know, but it's going to be very interesting information, to pay attention to. And I think because it's probably going to be coinciding with the reconciliation bill that's going to be hitting, Trump's desk. It'll be within like probably a couple of weeks, which is going to be our, fiscal spending bill, which there's a lot of hawks that are pushing back. And if the tariff rate is a little higher than expected, that people are looking for, if the spending bill is just not quite as much, and we're just not getting as much fiscal spend, all that could come together, in a couple of weeks as we head into, so just basically don't think that June's going to be a slow month. It's probably going to be very busy as well. And you look ahead into next week, and next week we do have a few things that I think that it's worth noting. We have Canadian CPI, we have the RBA next week, sterling UK inflation. We have PMIs that everybody's going to be watching going into next week. But is there anything on the radar, Ryan, that you're looking for into next week that we should be really paying attention to? Or any markets that are of note for you?
Well, yeah, we've got, as you said, a couple of central banks next week. I think the RBA, everyone's expecting a cut there. We do have a bit of data today, though. We've got building permits and housing starts, and we've got the Michigan as well. So if it's a quiet market, sometimes the Michigan can give us a little bit of something, seeing as everyone's keeping a beady eye on the consumer, particularly after the retail sales this week. So it's the flash number for May. So it's something new to keep an eye on.
Yeah, and you know, you talk about housing starts, and you know, it's data that typically we don't really pay too close attention to, but I'm going to say, you know, home prices are really starting to come down in a lot of markets, and you know, I'm not so concerned about, like, you know, having some housing crash, but what I am concerned about is that you know, the upper end of well, let's just say the top, you know, 20-30% of the US, though a lot of their net worth is tied up into not only their home values but multiple homes. And so as these as home values start to come down, I'm more concerned about, you know, the wealth effect in reverse and consumer spending. So that's why I am paying a little bit closer attention to home prices, what we're going to be doing with housing starts, building permits, and if home builders are really going to scale back on this, especially as prices start to come down. So that'll be interesting. And then obviously the University of Michigan consumer sentiment and inflation expectations will be big, because you know, this is going to be a more recent survey post Liberation Day. So that's going to be interesting to that read might be a little skewed because of that this month. And I think that's going to be interesting, as you
I
point
heard
out.
a guy, Blake, you
Yep.
could throw another one in the pie. He uses Walmart, not the way you think you would use it, but then when Walmart is doing well, that's a sign of consumer stress, because the upper end is trading down to shop there, and that's why they're gaining market share and doing well. Is
You
you know the
know,
low,
I think Walmart is a really good recession type of indicator. You know, but what you know, what's really
but
interesting,
when they're
John?
doing well is when it's a recession
Inverse.
indicator, because the upper
Yes.
end is coming, that they're you know they're stepping down from
Yes.
Neiman
Yes.
Marcus.
Yeah,
Yeah.
yeah, yeah, and that's a great indicator. You know what else? And this is not same subject, but not some same subject. I was in Costco yesterday because I was buying all this party stuff, and a lady screaming over my shoulder at the guy that's, you know, checking us out. And he's like, "Yeah, I bought Nvidia on this dip," and she's like, "You know, you keep telling me to buy these stocks," and you know, and this is the guy that's checking me out, and a
Oh,
lady that's screaming behind me talking about buying the dip in the stock market, and she's, you know, got a kid in the cart, and I'm just like, holy shit, man.
yeah, the shoe
It's
shine
like
boy.
yeah, it's the shoe shine indicator just glaring at me going, oh my god, we need to be selling the equity
I
markets
saw a
right now.
clip
But
by Katie. Katie thinks we're gonna, um, you know, she hasn't turned bullish. She thinks we're gonna take out the April low sometime
really,
this year. It's not actionable, but
yeah, I mean,
she's
that's the
still
kind of stuff,
bearish.
it's anecdotal evidence, right? It's, you know,
Well, she
it's
said
not
the monthly did something, and it even with this rally, it hasn't negated or negative monthly signal.
interesting. Hey, K man, we got a couple minutes before you know, the bottom of the hour here, and Dale's gonna have Ben Maldonado here. But what are you looking at right now going
As
into
I
this
said
next week?
earlier, I think I'm going to go very light in into this weekend. I let the market do its thing a little bit, but I think next week will be pretty big. We have our BA, we have those data, we have the G7. A lot can move next week, in my opinion. So obviously the Aussie is going to be one that I'm always looking at the metals, obviously, but yeah, we have sterling, we have UK CPI out as well next week, if I'm correct.
You are correct. Yes,
So
inflation.
there are a few things going to happen, but I do think we may have a bit of news. So next week depending on how and who talks to each other over that G7, I'm thinking about I'm going to finally get my focus back onto the yen.
So you just said who talks over one another in the G7. I assume you're insinuating something there.
Well, I mean, they're supposed Besant and Kato are supposed to talk, unless Besant ignores it. But they are supposed to talk. So there are a few things that could be said between Japan and the US, right?
Yeah, I mean, there could be. There could be. So we'll keep an eye on the dollar yen. All right, guys. Well, you know, it is kind of a slow Friday and with volatility continuing to come down as equity markets recover. Dale, I guess the question is, are we going to hit all-time highs or not? You know, Michael Brown from Pepperstone, he was just in our chat room yesterday saying, well, 6,000's a given. And so, you know.
Yeah, I don't
Yeah,
think it's
he needs to up his game a bit to 6,100 because if it hits that, then he owes me
Yeah.
lunch.
Yeah.
If it hits 6,100, he owes you lunch.
Yeah.
Oh, so Ryan thinks 6,100 is a given.
Pretty easy call compared to a month ago.
Yeah, right. If you yeah, right. How about
That's
this,
all.
Dale?
Well,
How
we-
about
I
I give higher odds to hitting 5,500 before 6,100.
I think we made it when
I-
it was about 5,500.
Yeah.
Wait, what happens at 5,500?
No, we made the bet when it was about
Yeah.
5,500.
Oh, okay.
That
All
was a
right.
breakout when it was, that 5,500 measured up here. Right.
That's a good bet. You know, he thought 6,000. You think 6,100, and you know, maybe he owes you what do you guys eat over there? Cornish
Sawdust.
hen? What?
Sawdust. We're too poor to eat anything else.
Sawdust.
Sawdust. All right. Well,
A bunch of termites over there, I guess. I don't know.
That'd be a bonus.
Hey, it's, you know, guys, as we wrap up the week, I do want to mention that we are still, you know, we still have our liberation offer, but as Stelios has been hounding me this entire week, he thinks it's getting a little long in the tooth and we need to pull it. So we haven't removed it yet, but we're about ready to. We're getting close to removing it. So if you want to lock in these very low prices, you know,
This is your last weekend.
well, I don't know if it's the last weekend. But we're getting close.
It is.
Oh, okay. Dale says it is. Well, then if Dale says it is, it is. We'll see. But I do agree. We're probably gonna have to pull it soon. So you guys take advantage of that pricing while you got it. And Dale, I want to thank you for guiding us all week. It's been a great week. And like I said, volatility's come down, and it's getting to, you know, levels of big support. Daily sentiment index for volatility is getting into the scary levels again. That means it's too low, and we might be due for a pop soon.
The greedometer didn't take it long to shift from almost breaking the wheel at extreme greed and falling off the meter, the hand, to we're back into greed.
Yep. Everybody's
didn't take
looking
long.
for all-time highs in Bitcoin, all-time highs in stocks,
Everything, yeah.
all-time, yeah.
Long the world.
Long everything. Long everything is usually a scary place to be thinking right now. So
okay. Thank you guys. K-Man, thank you for your hard work. Ryan, for taking the time to, you know, let people see what's happening under the surface with options.
Pleasure, mate. Have a good weekend, sir.
Yeah, you have a good one. And Blake, thanks very much. And
thank
Steve,
you,
even though you're behind the scenes, have a great weekend, Dream Team. I think we did a pretty good job with some good ideas this week, mainly early in the week. You know, I don't think anyone got caught long the dollar this week. So mission accomplished, as George Bush said. And I have Ben with us. So great way to cap off the week with my trading warrior brother, Ben Maldonado. And Ben, welcome back Friday. I'm exhausted by the end of the week in this new regime. How you doing?
I'm doing great, Dale. Thanks. It's great to be back with you guys, and I love hearing
Yeah,
the banter in the mornings.
yeah. So, God, so much has happened since we last talked. Although we do communicate, I guess the million-dollar question: what do you think? We were just talking about it. We're going to make new highs, or we're going to fail in this zone here and have a pretty good pullback? Is the big question. I didn't expect this much this fast. Did you?
No, I didn't think we would get this big of a rally. We did kind of like as you and I were talking offline that expect the bounce and a rally.
Yeah,
Did,
5,800, I figured.
yeah, that was like okay, optimistic. Let's see if we can get to
Yeah,
5,800, and
yeah,
here we
right.
are.
Yeah. So
Uh,
why don't you
the,
take the screen, and
all right, let me share.
it's sometimes worse than dead air is to have a blank screen. There we
Sure.
go. All right. So
So
go ahead.
I was going to say it's interesting. I love hearing you guys talk because you can in your voices, like in K-Man and Blake especially, they're feeling like this imminent change that's coming up next week, in terms of cycles, and we're going to get into that. The big thing I want to show today, because I haven't seen this comparison made, much across the FinTwit universe. Donald Trump and Richard Nixon are so connected, and the things that are happening now are echoes of the things that Richard Nixon did in the late 60s, early 70s when after he got elected in 68. And if you go back and you study that history, you can sort of see the similarities, and it gives us a decent idea of what we might be able to expect is coming in the next 2 to 3 years. And so we're gonna review that. We're gonna look at all the conflicts that are happening, being caused by the cycles, the sort of conflicts between people who are vested in the old system and people who are trying to bring change and usher in the new system that's more sort of congruent with what the cycles are doing. So we'll look at some of those. I think catching the waves is all about, I'm starting to hear this rumbling about active versus passive. I think, I'm going to step out on a limb and say buy and hold is dead. You
Oh,
got to,
that's not a limb. That limb I sawed that off 8 months ago. You
yep.
you can't go to the golf course and just own the SPY anymore.
And the sad thing, Dale, is that's what everybody thinks, right? Everybody's been trained to do that, and that's what they're doing. They're just saying, "Oh, you just got to buy the dip and forget it." I think 10 years from now they're going to be disappointed. And we'll highlight that upcoming timing, and then we'll hit a couple markets that people can look at where I think there's some opportunity.
Okay, I'm interested in all of them. Is Trump Nixon on magnified on steroids?
Yeah, but it's kind of the similarities, of being, sort of derided and not well liked and thought, poor of personally. Everybody knows those, but the things where I'll highlight a couple of them in here where I think it's really, really interesting is Nixon wanted to be known as a peace president. Now, before I started researching that for based on the history books and what we've been told, I didn't know that. Did you know that?
No.
In fact, on his gravestone, he asked, and they put as his epitaph, they put the greatest honor history can bestow is the title of peacemaker. And
Yeah.
that's actually on his gravestone. And now Trump, who
Yes.
again, nobody would have thought of him as being the peace and the diplomat guy. That's all he talks about. He wants no wars. He wants peace. He's trying to mediate things. He's trying to sort of lower tensions. And so again, there's that connection where you don't expect it. It's not well publicized and it's not touted, but these guys are connected because these times are connected.
All right.
Uh,
Well, it's going to be interesting is even though they want what they wanted to be known for, and maybe like Mike is saying in chat, Nixon wanted to end the Vietnam War,
Hmm.
his presidency, almost all of it was during a war.
Yeah, I
So,
mean,
so something to think about, even though, even though Trump wants to be the peace president, there's still war everywhere, but we're not involved to a big degree yet.
yeah, I
But
mean, if events can
there's still war.
overtake what they want, absolutely.
Well, I was
There's no,
just saying there's irony in the fact that Nixon wanted to be known as a peace president. And he actually, I think, escalated with troops the Vietnam War,
he
sent
did,
more.
he does get credit for ending the fighting in Vietnam, and he did end the draft. So those are
Okay,
accomplishments
that's
that he
cool.
had.
All right.
But you're right. I think he had to escalate to de-escalate, sort of like
Okay.
what
Like
Trump had to
Putin.
do with the Houthis, right?
Yeah.
He
Yeah.
had to escalate to get a ceasefire. But anyway,
Yeah. All right.
I
I'm
thought that
sorry
was
interrupting.
no, it's okay. That
No,
was a very I thought it was an interesting connection. The other
I think it
thing
is.
I
Yeah.
didn't know is that privately, apparently Nixon thought and believed that the election was stolen after he lost to
Yeah.
Kennedy.
Yeah.
You know,
Huh.
because it was so close, he thought it was
Right.
stolen, and you know, obviously there's that same connection with Trump. Both of them did something that it's really hard to do in politics, which is to win a national election after losing one. After
Yeah.
losing a national election, they both did that, and they both, you know, governed over a nation that was deeply divided. Let's we're going to look at the similarities and what they each did. Let's start off with their economic policies. And one of the interesting things that came out of this study that I did is there are recurring patterns where things that U.S. leadership does during times of economic distress. And we're going to show you how the times from the 70s to today, while not exactly the same, are very similar. So we're seeing a similar sort of policy response from leaders. A couple of things that they do. There are populist risings and responses due to inflation and trade imbalances. Check in the 70s, check now. You need strong economic leadership when there's cyclical distress. Like when the cycle turns down, leaders have to do things to help people. Both times there was policies where they targeted working class voters, promising them jobs, stability, sort of bringing back the things that they had lost. Their interventionist measures, where they were interventionist in their policies, both of them prioritize domestic strength over ideology, and we'll show examples of that. So the bottom line is you see in times of economic distress, both Nixon and Trump had bold nationalistic based policies, which was, you know, sort of the same America first thing now as Nixon was doing back in the 70s.
Did Nixon call in the National Guard on a few occasions?
That I don't know. I didn't see anything as really highlighted
I
by that.
mean, during the Vietnam protests and, kids getting shot at, I forgot the name of the
Kent
Kent
State, right?
State. Yeah.
Right.
Was that during Nixon or Johnson?
That's a good question. I don't remember. I don't
Okay,
remember the
because
year of
there
that.
is talk of suspending habeas corpus,
Yeah, I mean,
and all it would take is, some unrest.
absolutely. And we definitely have that. Let's look at the economies. What both of them faced was difficult and tough economies that they had to deal with. There were populist issues and inflation pressures. Nixon, of course, had stagflation, where inflation went from 4.7% in his first year up to 11% due to the war and the oil shocks. Trump is dealing with this post-COVID spike. Everyone's like, I think we're getting sort of that mission accomplished moment with inflation, which is really dangerous in this type of cycle that we're in. Inflation is going to be with us for a while. I don't think it's going anywhere, even though people are, you know, ready to declare mission accomplished there. Trade and anxiety, those were things that were present in Nixon, the same things that are present now. Back then it was issues on the trade with Japan and Germany, and the public was worried about, the US was declining. We're dealing with the same thing now, except it's China and other countries where we have these big deficits. But the middle class struggles are real, and they were present back in the Nixon administration as well. Let's look at what Nixon did versus what Trump's doing. Nixon put in place wage and price controls. And believe it or not, he put a 10% import surcharge on all imports. Wow, it sounds really similar to what Trump just did, doesn't it?
Yeah.
Trump, of course, he had the China tariffs in 2018. He had the CARES Act for COVID. He had the farmer relief bill. The interesting thing is both of them sort of went away from their conservative base and conservative
Fiscal.
roots. Yeah,
Yeah.
they
Yeah.
these were not conservative policies, getting off the gold standard or using wage and price controls, and Trump doing, protectionist tariffs or increasing deficit. That's not conservative fiscal policy.
Right.
So it's interesting how they both are departing off of that as well. Let's look at the foreign policies.
Well, what you say during a campaign and what you do in office usually is two different things.
Yeah. Yep. On foreign policy, both of them are using a foreign policy to promote U.S. interests and U.S. sovereignty. So Nixon opening up China was a way to go after, the Soviet Union. He did have sort of détente with a treaty with the USSR. Trump has reached out to North Korea. He got the Abraham Accords in his first term. He's trying to be a peacemaker in Russia, Ukraine, and India, Pakistan. All these things are designed. Yes, they want to, promote peace and they want to have no wars, but because it's in America's best interest, right? This is our best interest to not have to fund wars or get involved in these conflicts.
Yeah.
So it's all, if you look at their policies and you look at Trump's policies through that lens, they kind of make a lot more sense because it's all America first. And ironically, Nixon in his term was trying to reduce the US's global role. And that's exactly what Trump is doing as well through all the things that he's doing. So the similarities in policy, why are we going over the policy? Because the policy is going to affect how things happen, globally and economically at home and abroad. They both use trade as leverage. Again, that just rings so true of what's going on today with Trump. Nixon used that import surcharge to pressure the trade partners to do things they needed them to do in terms of geopolitics and economics. And Trump obviously is using these tariffs. I think he's trying to use the tariffs as a way to, sort of change the way we finance our government. And that may be the not stated purpose, but the real purpose is involved there. So the bottom line on the trade is both of them use nationalist policies and diplomacy to boost U.S. interests. That's what they were trying to do, and it's similar, and which is why, again, it's not going to repeat exactly, but I think we're going to see very similar economic and geopolitical environment as we did in the 70s. So I'm calling this the Nixon-Trump cycle. August 15th, 1971, Nixon ended the Bretton Woods system, which was put in place after World War II to promote redevelopment and global trade. In that moment, Nixon and his economic team basically changed the entire global monetary system because now the reserve currency was no longer convertible into gold. And they did it unilaterally. April 2nd is a date that it may go down in history as well. Trump raised tariffs on the rest of the world, And now he's unilaterally trying to change the global trading system through trade deals and other incentives and sort of carrots and sticks that he's using. Here's where the cycle comes in that I think we got to really watch closely. 2026 will be 55 years. 55 is a Fibonacci number. It'll be 55 years from the Nixon proclamation that the Bretton Woods system was ended. My question is, and I think it's a higher probability than normal that we get some sort of monetary reset in 2026, because that's the year where we'll be 55 years from the Nixon proclamation. It's not the only reason why I think we got to look at that, but go ahead.
How do you imagine the reset?
I honestly, I have no idea.
Okay.
Somehow it's got to be related to
CBDs?
maybe CBDs, but it has to deal with the excessive debts that are
Debt.
the sovereign debts that are out there.
They're talking about forcing bondholders by extending the maturity without giving them a choice, like to 100 years.
Yeah, and maybe it's some sort of debt jubilee. Maybe it's like an extension, like you said. There's
Yeah.
going to be some sort of reset. Now, 2026 is 55 years, right? Which is a Fibonacci number that I mentioned. It's also dead smack in the middle of this sort of final phase of the epic cycle, which we'll touch on in a second, and
Okay.
we've discussed before.
All
So
right,
that's why
buddy.
I think the odds are higher. It might happen, in this 2025 to 2027 range. But let's look at
Okay.
just quick for people that don't know about the epic cycle. It's a roughly 400-year cycle where there's a big transformation of how societies and institutions are organized and structured. We went out of the loss of confidence phase, and now we're going into the sort of failure slash replacement of the systems phase. And I think Doge is an example of it. I think, eliminating departments of the government, sending things back to the states and the local governments are absolutely a function of this, the background frequency changing from these large centralized institutions, support for them, to a more decentralized system. The last thing on this slide I think you look at, that I've recently added, we talked about Doge, tariffs. I think AI and robots are also part of this sort of tearing down an old system and what's going to replace it. What's the new system going to look like? Maybe we all have our own robots at some point, and that's how we manage our local governments and our lives and things like that. I don't know. I'm just speculating, but it hit me recently that AI and robots are part of this whole changing to a newer system that's more decentralized and less centralized. Now, clearly, AI could be used to centralize and control everything. And that's where I think the people that have the sort of evil plans of we want to use this to control everybody are going to fail, simply because the background frequency won't support it. This is sort of the old guard trying to figure out how they can hold on. So we'll see how that plays out.
Well, if you want to see something interesting, Google on YouTube Paul Tudor Jones talking about AI and a forum that he went to.
Okay.
It's pretty cool.
Yeah, no,
Anyway,
I
weird.
respect that.
I mean,
That guy's he's a big thinker. I really like
yeah,
his stuff.
yeah, and see if that fits in too.
Sure,
All
sure.
right, all right, buddy.
This slide, what I've done is I wanted to put together some of in the current phase that we're in, some of the keynotes or keywords and key themes to think about, because it'll help you, look at events more objectively and less emotionally. Because what happens right now is when something happens, if you're on one side of the aisle or the other side of the aisle, you react differently because you're going to support your team or you're against the other team. If you get out of that loop and just sort of look at it from this cycle and this sort of transformation that we're going through, I think it'll help you think clearer. I think it'll help you make better decisions in your life and better decisions, with your money. So these are some of the themes that I think for the remainder of this year you got to be thinking about. We're looking at a shortage of resources, less and contraction. So what does that mean? Not only are we not having slowing growth, I think there's going to be negative growth and recession, right? So look at it as part of the cycle. Look at, this abundance that people think, because we had it in the past, it's going to be more difficult now. Everything is going to be, resources are going to be shorter. There's going to be conflicts over resources. We've started seeing this happen, and I think it's ramping up at a greater pace, where there's going to be revelations and sort of the masks that people have shown, people in power have shown to the world are falling, and people are being exposed. It's going to continue to happen, and we have to try and avoid being shocked or surprised or judgmental, and just realize that this is part of this cycle. The leaders are feeling pressure to do something new. So new things are going to be tried. And so when everyone, again, I'm not making a political statement, but they throw their arms up and start judging when Elon's trying to do things in the government, or Trump's trying to do different things, or Kennedy's trying to do different things with health. This is part of the cycle. People are realizing that what we've been doing is not working. So there's pressure to do something new. So be open to new ideas, be open to new approaches, because while some of them won't work, some of them actually might. We're also moving into an unknown future, and that is unsettling to a lot of people. You have to embrace the uncertainty and know that we're going to come out of it okay on the other side, and there's no guarantees about how it's going to come out. But we're going to come out of it. It's just we don't know how. And so you
We've
have to.
always moved into an unknown future.
It's true. It is absolutely true.
Always. I mean, my whole life. How about you? I mean, you think you have certainty, and there are times when things are static, but it's always an unknown future, isn't
I
it?
mean, here's
I
an
mean, we're
example.
traders. Every moment's an unknown
Uncertain, right? We
future, right?
it's a lot easier for traders than the common person to deal with uncertainty,
Yeah,
right? Because that's our life. But
yeah,
think about this, Dale. Let's just talk about in America. People in America used to have the confidence and the belief that my kids will do better than I did, right? Their future will be better than mine.
true.
Right? And that's going away. And I think that's part of this sort of unsettling, anxious feeling that people are going through, is that better life is not like a guarantee or a known now. It's
No,
unknown.
no, they're living in their basement with
Yeah,
their
that's
kids.
right. That's right.
Yeah,
So
yeah,
let's look at the last few. Shock and surprise. Of course, it's going to, the most important thing is that the people in charge are trying things, and some of them aren't going to work, and they don't know if they're going to work. So there is going to be surprises, there's going to be unintended consequences, and there's going to be shocks. Know that in order to get big change, you got to have big crisis. So expect to see a crisis, but don't look at it as something you have to panic over, but look at it as part of the process to get to the other side and the changes that have to occur. Okay, with change comes conflict. These are some of the things that I lined up. What I would say is look at them and try not to pick a side, right? Try not to pick a side, but understand it's part of the process. Because I think part of people getting stuck and part of this acrimony is, one side wants one thing, the other side wants the opposite. Or because they want one thing, the other side goes the opposite. Start looking at it in terms of what's supported by the cycle, the decentralization, something new, changing the system, that's the kind of thing. If you want to support something, support what has a better chance of succeeding, and it might help relieve some of this tribal feelings and this anxiety of, oh, I gotta have my side's gotta win. I don't care if what they're trying to do is better for me. My side has to win because I do think that's a big part of the problem. And these some of these are obvious, some of them are not obvious, but this is conflict is part of this process to get to the change.
Yeah.
We've been talking about these epic cycle plays for a couple years now. I still think they're valid. Uh, Technically, you don't want to buy uh, gold when it's up on a spike. You want to look and see how this correction is going to play out. Silver and Bitcoin, same story. But let's look at the charts. So gold's done really, really well for us. I think we first talked about it in here as an epic cycle play as it was breaking out of the circle. The key thing, this is a monthly chart. The key thing is to watch on these pullbacks is, can we stay above this full square at 31.54?
No,
I mean, probably not if the correction gets big, but I mean, look at the corrections in gold that we've seen, man. This thing's
they've
just
been
been
small.
sideways, right?
Yeah.
Basically sideways corrections, and then we go. Small pullback, and then we go. Triangle, then we go. Congestion, then we go.
Yeah.
So we could go sideways for 6
What's the
months
one
here.
under 3,100? What is that one?
That's 27.94, around 2,800.
Yes. Yes.
That's another logical spot. If we don't hold there, that's the next spot.
And then if we don't hold there, where's the solid line? 2,500?
Hold on, let me go back to gold. There we go. The solid line's a little under 2,500.
Okay, possible.
Yeah, it's possible.
Okay.
The thing I'll show here is gold from low to high. You can't see it at the bottom of the chart. It got
Yeah,
cut off from this
yeah,
low to this high, and from the 1999 low to the
yeah,
2011 high was 144 months. If we
yeah.
do 144 months from the lows in 2015, 16, it takes us into the near the end of 2027. And so
Beautiful.
that's kind of the timing, bull market timing for the end of that bull market.
So if we get this pullback into the late summer, fall,
Hmm.
into these ranges, then you're talking about that you have a year and a half hold on them.
That's right.
Beautiful.
Yeah.
Like it.
Yep. That could be
Because
the
to me,
final
that's
leg.
a decade now. Okay. A year and a
Right.
half hold.
Right.
All right, go ahead, bro.
All right. Let's go to the next one.
Silver Fox.
Yep. Here's silver.
Yeah.
The interesting thing about silver, it hasn't had the huge move of gold, but look where it's consolidating, Dale. I mean, on
Yeah.
top of these old highs. I mean,
Yeah.
it's perfectly fine
Yeah.
above 2666.
Yeah.
That's the full square, the 45 degrees up. As long as we hold above that on a monthly basis, next level up is like just under 38, and then after that we're looking at 50.
And then 80, 90, 100.
Right, if we really get going.
Yeah. Okay.
Let's look at Bitcoin. Bitcoin's interesting because it was correcting here. Everybody gets crazy and gets angry when it's not flying high. And,
Yeah.
and this was a good 6, 7 month correction. But
Yeah.
look where we pulled back to. Perfect
Perfect. Yeah.
structural support, full square support here, like
Yeah.
just over 74,000. And now we're sitting on top of the next level, which is, the 93,000 level. So I think as long as we're above 93, we're going to new highs in Bitcoin.
I agree. I'm 92 as that pivot. It's come into play a few times.
Yep. Yeah. So that's the spot on
Okay.
Bitcoin. Let's talk about passive versus active investing. Dale's been on this for a while. I think people are going to start to realize this. Passive has dominated active for not just years, but decades. Big cycles tend to bring changes to style performance, right? Because they change moods, they change the way people look at things, they change the way people feel. So I'm expecting we're going to see changes to style performance. Since we've made the connection between the 70s and now, in the 70s we had slower growth with higher inflation. That's kind of what people are talking about because of the amount of debt sovereigns have right now that we're looking at for the next decade.
Yep.
And I've heard Blake say this on the show in the past week or so. What if the indices go nowhere for a decade? Where we're just in this major,
Yeah.
big trading range, around, 5,500 or around 5,000, where we go, over it by 1,500 or below it by 1,500.
Yeah.
That buy and hold will disappoint, and I do think we're in the era of the trader. I was using AI to try and get some statistics and some numbers. Um, this is an interesting thing. It shows the percent of active funds that were outperforming passive and the annual returns for both. Most of these are estimated, but before the period during the 70s, up until about 75, the estimate was at least half or more of active funds outperformed passive. And then in 76, when Vanguard started with the indexing of the S&P and these things started becoming popular and the monetary system changed, the numbers dropped to 20 to 30%, 14% during the period from 2011 to 2020. And again, in the latest period, only 20 to 30% of active funds have been outperforming.
Mhm.
I specifically wanted to zero in on that time in the 70s. Active funds from 68 to 82, the estimate was 40 to 50% outperformed. And then here's, a couple sub periods where again, it's similar numbers. So if we're going to get a similar economic environment, if we have similar sort of background frequency for us humans to, soup to be sitting in and sort of how our mindset is, maybe there's a good case for, active versus passive management going forward. All right, let's talk about timing. This is actionable stuff. It's not 400-year cycles. It's stuff that we can do today. We have a Rebel Yell cycle, which we've talked about in the past. I'll briefly go over that. There's some Gann time counts that are coming. When you have confluence of multiple cycles like this, you pay attention because they generally have a high probability of hitting and hitting well. The Rebel Yell is a proprietary swing trading cycle that we developed, my partner and I. The swings can be from 2 to 12 weeks. It provides you a specific point where there is a high probability of a change in the market. Now, what could the change be? Some of the changes could be a V, right? Complete change in direction. It could be an acceleration of the trend, or sometimes it's just instead of going up, you then move into choppiness and go sideways. The next cycle hit is Sunday, so this is timely. We have a big cycle hit in the Rebel Yell on Sunday, the 18th, and we're obviously rising into it. This is a 4-hour chart with some of the recent signals that we had. The last time I was looking, Dale, the last time I was with
Yeah.
you was on February 19th,
Yeah.
and we talked about the hit on the 25th that was coming up, and
Yeah.
there's your result.
Yep.
We had a hit on the 26th in the middle of, this mess, and we got that move. This last hit on May 1st, I incorrectly thought it was going to be high. It actually looks like it was a nice low, and we're sort of roofing right into the next hit on Monday.
Okay.
So
I've seen a few Rebel Yells work.
Yeah.
Amazingly. So just to let you guys know.
The key thing, it's not an automatic V. So don't just think, oh, because it's, Sunday night, I'm going to sell Monday. Get your technical setup, look and see, are you getting, higher highs and higher lows? Are you getting lower lows? Have some technical basis to where you can interpret what the effect of this cycle hit is on the market. So that's
Where's
one
that
thing we
next
have.
time zone that you have? It's not the vertical line.
The 18th,
The-
that's the next hit.
With the arrow, that's the 18th?
Yep, that's the 18th.
Okay.
I just took this screenshot 2 days ago.
Okay.
That's why it doesn't look close, but it's the 18th, so it's Sunday
All right.
night. Sunday is
Okay.
the next hit.
Starting to diverge.
Yep. Let's talk about GAN time counts. They identify periods where a change in trend is likely. It's more highly probable than normal. GAN's major numbers are 90 and 144 in their derivatives. Multiple time counts coming off the April lows are completing. So May 20th is 90 calendar days high to high. I'll show you that on the chart. May 22nd is 45 calendar days low to high. So we have a 90 and a 45 coming up this coming week, along with a Rebel Yell cycle hit, all clustered within 4 days. So let's show you
Confluence.
those. Yep. So here's your low, right? Here's your low, and you take 45 calendar days, puts us right there, which is the May 20th day, May 22nd. If you take the high, 90 calendar days, puts us on May 20th. And so we have this leg moving into a 45, and we have this high to potentially high going into a 90. So that timing is important. Is it 100%? Does it always hit? No, but you take notice, and we watch to see what happens here.
You probe it and then you protect it.
That's exactly right. Manage
You don't
risk.
know which one it's going to be, so you probe, you protect, you take partials, and then you also protect the remainder.
That's it. And if you're using leverage, you take your capital out and you let the rest ride.
There you go.
All right, let's talk.
BE. Get
Yeah,
the BE.
so that's right. Let's talk about opportunities. Last time we talked about selling the builders. I think you can still sell the builders.
Okay.
Look to sell risk if we get the setup in the upcoming time window that we just talked about.
Yeah.
Buy hard assets. A couple of the grains look good. Cocoa is back on the radar. It's actually up big today too. But cocoa looks like it's going to go to new highs. Buy or sell US dollar. Why do I have that as a question? I have it as a question because it depends on the levels, right? We're going to sell it if it breaks down. We're going to buy it if it hits other levels. And
Yes,
sell
buy
rallies.
and sell the US dollar. The
That's
answer
right.
to that question is yes. Go
And
ahead.
you know what, Dale? I think that's true for every market now.
Yeah.
You've got to really put your trader hat on, right? And look
Yeah.
for the extremes. Look for where you can put a good trade on with a good risk reward, whether it's bullish or bearish. And I still believe, again, because of the 70s comparison and the technicals, you want to sell rallies and bonds. I
Yeah.
think you're
Yeah.
in that same camp.
Yeah.
All right.
TLT held again at that 85 level.
Yep.
So yeah.
Here's the builders, home builders. We were
Yeah.
talking about it here last time. Got
Yeah.
a nice sell off right down to support, and we've bounced, and now we're right back at resistance again. Trend line. This is a one by one
Yeah.
trend line.
Yeah.
I think
Second lower high.
Yeah, when we talked about cycles last time, we talked about the real estate cycle. Blake was talking about it with the people's houses. It's not going to be the great financial crisis again, but housing could go down 10, 15, 20% housing prices. No question about it. And the builders are starting to reflect that reality of the cycle. Here's the picture on the ES Weekly. If we want to keep rallying, which we have been, we could potentially go up to this 60.39 level and then roll over because that would be resistance. But if we roll over anywhere in here, it's a lower high. So we're watching to see where this counter trend's going to end. We know there's resistance at 60.39. We know we have this timing coming up next week. So we drop down to lower time frames and see if we get some sort of reversal and then see if that filters through to the bigger time frame like a weekly. NQs, this is a monthly. Key number here is 21,082. It's a half square right here. If we can't clear this 2182, in other words, get a full bar above it, right now, the last bar, this past bar is crisscrossing it. And if we get stuck under this, 2182, it's another lower high in the NQs because you have a high, a lower high, and this would be a third lower high. So you should get a nice ride down if that happens. So we're looking again to see on the lower time frames, do we see any reversals and any turns lower next week?
Okay.
Here's beans. This is the best looking grain.
I agree.
This is a weekly. Yesterday we had some trouble, not surprising, at this 1060 level, right? We probed it up, made a little marginal newer high, and now we reversed. So we're stuck in this channel. But you could see from the Ukraine war start high coming down, we're about to break this downtrend line. And when this this sideways action, this channel gets taken out to the upside, I think it's going to be a pretty fast move up to 12, 1300 because that's
Looks
the
good.
next resistance up here. So I like the beans. Corn similar. What we're looking at here, again, it had trouble at this 517 resistance. We made that spike high and we reversed. What I want to see is can we hold this 412 level and do we get another higher low? Because we have our low here, we have a high here. Can we get a
Yeah.
higher low and then use that to launch?
Yeah.
And this is a weekly basis. So it's bottoming, not as well. It's not acting as well as the beans, but it's acting better than wheat, and it's still acting in a manner that's something that's trying to bottom. All right, let's see. What's the next one? We already did that one. Here's cocoa. So cocoa made this huge move up, sharp pullback, made another high, and now we've made another higher low here, Dale.
Yeah, look, it's going for a third drive.
I think you're right, Mr. Three Drives. There it goes. So I think this 13,000 level is doable, and
Yeah.
we broke out of this. If you go down to a lower time frame, you really see this sideways movement we did for a couple months here, 4 or 5 months, and now we've broken out of it, and I think we're heading higher. So watch cocoa for longs. Here's the Dixie. All right, let's talk about the numbers here. As long as we're above 98.41, I got to be bullish. That's this half square, right? We dipped down, touched it, and reversed higher. And if on a monthly basis we stay above that, the pressure will be up towards 107 again, 107 and a half. But if we fail and if we get below 98.41, you sell this thing with both hands because we're heading down to that full square. And that full square is, probably around 90, high 80s. You're gonna go down and test these lows here from 2018 and 2020.
Okay.
So that to me, that's the key number.
All right.
And here's bonds. Why do I think we sell bonds? We made this low in 2023, and we've essentially been going sideways. Right? We had a decent. We did an ABCD up, which is normally a very corrective pattern, and now we're rolling over again. And here we went low to high was 45 weeks. If we go high to low 45 weeks, it puts us into like July, late July
For a high?
for a potential low.
Oh, okay.
Yep.
All
I
right.
think we make a low. I think we take out these lows and you're targeting like around 101. So maybe this is with some sort of reset. Maybe this is with some sort of sovereign debt crisis. I don't know.
Yeah. Yeah.
But to me, this has been a sideways move and we're rolling over again.
Yeah. The Rip Van Winkle trade. Yeah.
Rip Van Winkle. And that's
You
it.
know that guy. All
That's
right.
it.
Wow. Great. Real nice stuff. Actionable and things for us to think about in the world we're in right now, Ben. I appreciate the hard work you do. So people to follow, Ben, go ahead, give them the litany. And Ben has a real nice YouTube channel. So
Yeah, we
go ahead,
have a
bro.
YouTube channel where we do a weekly video just covering all the key markets, trying to give people levels and cycle timing that they can use. We do, it's about an hour video every week. So, and we put it out usually on Saturdays. So you can check that out. People are pretty happy with the ideas and the information that comes out of there. And then if you want to follow me on X, I post every day. There's the URL. Just try to post research ideas to help people, be prepared for what's coming. And know that next week is really important in timing. Even if you don't believe in cycles, watch the markets that you watch the stocks that you focus on, and see if you see any change in character, because it won't be surprising if there is, because these cycles are pretty reliable and very important that are coming up.
The art of trading is not the if, it's the when.
Right.
So Ben puts a lot of energy into the when as well. So thank you, my trading warrior brother. Appreciate you coming here and keeping us informed on the Siamese twins, Nixon, Trump, and and everything else that you look into, and appreciate your philosophy of us people trying to live less angry. I think that'd be a nice remedy for what we have going on. So
It's just, yeah, it's just looking at it through that different lens. Look at it through the lens of a cycle, not your team winning or losing, right?
there's only one thing we can control, and that's our thought life.
Hmm.
So, and it's important what you think, because that's what manifests. So I appreciate Ben. Be talking to you later on in the summer. Probably see a lot of these things we talked about today manifesting. Have a great weekend, buddy. And I hope that pips just overtake you like a flood.
I appreciate it, Dale. It's always great to spend time with you and the team there at Forex Analytix, because you guys do a great job at keeping people informed, and that's a nice thing to do. Admirable.
We're all in this together.
Yes, sir.
No matter what team you're on, we're all in the same boat.
That's
So
right.
let's learn how to row together. And with that being said, don't just count your pips, count your blessings, and appreciate everyone's attendance. Hope you had a great week here, and I'm bringing great people for you to follow and make yourself better, and have some decent intelligence gathering into your thoughts and your actions in the market. So that's a wrap, everybody. Adios. Thanks again, Ben, and see everyone next week.
Take care, Dale.
Okay, Ben, you too. You're welcome, everyone.